And we are live. Hey friends, Ernie here with the Trader of Futures. And it's a start of another week. It's Monday afternoon here on the East Coast, 1 o'clock in the afternoon. The days are getting longer, but they're not getting much warmer yet. That's because it's still February, and it's not until the end of February, March, something like that, in this area where things start getting a little bit more tepid. Yep, temperatures are still in the 20s, low 30s, causing me to up the number of searches that I do on Zillow for Florida potential homesteads. Yep, that's what I'm thinking. I'm thinking Florida. Yeah, it's a fucked up state, but there are no taxes. And it's warm. That's what you get. You get a fucked up state. I mean, in terms of crime and weird people. But, you could choose a place with a lot of land, away from people, the warmth, the low taxes, the serenity, the beaches. I can take that. Any day over a New England winter. Although we've been very fortunate that we haven't had much snow. Of course, I'm probably jinxing us right now. We had another year like this where we had hardly any snow, all the way up through January 28th. And then we had the worst winter in recorded history. We had 8 feet of snow out in my backyard. 8 friggin' feet. Well, this year we've only had one storm. Had about 5 or 6 inches of very, very wet snow. Got a chance to use my new snowblower, my Arians. And that was good. At least got it, got its first legs. Now I'm wondering if, spending all that money on the snowblower was premature. I guess not. That's all right. Maybe me buying the snowblower warned off that bad weather. Anyways, let's get to the markets. And the one that I'm kind of interested in this morning, because there are people out there that claim to know technical analysis, and they want to apply that to Bitcoin and all the other altcoins, and they're consistently wrong. Consistently, they're all calling for this massive breakout because we're in a falling wedge. Of course, they really don't know the dynamics or history or data or proper setup or anything. The probability of a falling wedge. They don't know the context. They just see a falling wedge and think, oh, that's bullish. Bitcoin falling wedge, extra bullish. And it looks like what we're really seeing is the setup of what is now becoming a legitimate technical analysis pattern, and this shows you just how legitimate technical analysis is. Something called the Bart-Simpson pattern. That's right, the Bart-Simpson pattern. Let's see if I can bring up the graphic that I have. Is this it? Yeah, I think this is it. There it is. There's the Bart-Simpson pattern. So, if you look at Bart Simpson, he has this head that goes straight up. I guess that's his hair. Goes straight up with spikes and then straight down. And the reason for that, and the reason why it is so apropos to Bitcoin. I mean, of course, this is something that you would hardly ever, if ever, see in normal markets. But Bitcoin isn't a normal market. It is a extremely manipulated market. Not that all markets aren't manipulated, but Bitcoin brings manipulation to a whole new level. The entire market is manipulated all the time. Then there are a bunch of wannabe traders that think they understand how it works, and they want to be along for the ride for that point in time when we've hit that bottom, supposed bottom, and then they can take it to the top cash in for their Lambos and hoes. See, every time Bitcoin goes up, it's the result not of any kind of natural dynamic, natural supply-demand activity. It is exclusively because there are whales out there that are manipulating the price. And you can tell this because, well, let's just be honest, that there is not this set of mass psychosis that at 5 o'clock in the morning that there are, tens of thousands or even hundreds of thousands of retail traders all with their finger on the button and push buy at the exact same friggin' 5-minute interval. That would be the only way you could explain this pattern. So we know that that's not happening. So the only other possibility is that there are manipulators out there, whales, that are trying to game the system. And they are. They are pumping it up to a certain level, allowing it to level off, maybe then attract enough greater fools to come in and add to that, and then they sell. They dump it all. So you get the left side of Bart's head, and then the right side of Bart's head. Pretty simple. So I think that it is crypto that actually made the Bart Simpson pattern a reality. The idea that we have a pattern that is fashioned off of a cartoon character's head shape should tell you everything that you need to know about crypto. That it is as real as the cartoon character. It's just the way it is. Bullshit. Total, utter bullshit. Bitcoin bullshit. Bitcoin Bart. Bitcoin Breakout. Bullshit. Of course, my strategy is in full effect here, and that is to short every friggin' rally. That was a little bit redundant, but yes, short every friggin' rally. It's been a great strategy, and I don't even know how can you call this a rally. It was one or two or some coordinated group of whales that all decided that this is what they're going to do, and they pushed the button, or they programmed their robots to do some more malfeasance, to extract money out of the noobs, out of the hopeful, the plebes, the wannabes, the fools. It does them a disservice to call them the greater fools, because they are really the lesser fools in stature and intelligence. Yet, we have all these people following them. Like Crypto Kirby and the Moon and others. Holy crap. I don't know what to say. Just don't know what to say. We're going to keep a tight control on time here. I don't have a huge amount of time today. So we're going to get to your comments real soon. First, I want to talk about the volume profile course. It is going to be held this weekend. If you're interested in it, go to traderofutures.com and click on the volume profile ad there, square in the right sidebar. Use the code that you see right here to get a discount. It's going to be good for this week only. The other thing that I'm adding to the course is an on-demand course, which by itself will have a a certain cost. I mean, it's going to be $100 for that, and you may wonder, well, why don't I get the on-demand course? Because it's only going to be a reference. It's not going to be the course. It's not going to show you strategies. It's not going to show you. It's also not going to provide you with the live support. But anyways, that is going to be in addition to the live course. You will get this online course, an on-demand course that will come with it, so that you can then refer to it and have things that you can look up and refresh your memory. So that's going to be added to it. And at some point, I'll release that course as a standalone. Lavon, great days. Bob, Toucan, Idek, Yurgiri, great days. Leonardo, Asdirt, how you doing all? Algriad, I guess I think I got most everybody. I don't know if I pronounced your name correctly. Sorry. Bob wants some Bitcoin TA. There is no such thing as Bitcoin TA, Bob. It simply does, I mean, every once in a while it follows some of those rules. Every once in a while. But it's very difficult to play by these rules, these, what you might think are higher probability. When the probability gets thrown out the door as you get these whale pumps, these Bart Simpson patterns. Why anybody would sit here and think that they could bet on Bitcoin going long, especially when everything is going against it, besides the very poor performance in the market. The fact that enterprises have yet to be able to find a use case for crypto that makes sense. Look, the technology has benefits. There's no doubt. But you have to ask yourself, well, why hasn't it taken off into the enterprise? Why? Or why hasn't it had this sort of grassroots movement? A sort of organic movement in the consumer field, in the consumer market. Why? Why hasn't it just exploded? And that's because the benefit that you get from it, the friction it takes to actually get into it, all the barriers that are surrounded it, the lack of regulation, the manipulation, the fraud, all of that stuff completely overshadows any benefit that it might have. And that's not only for the consumer, but it is equally and even more so true for the enterprise. It's why the enterprise has not... I mean, there are some enterprises out there that are trying to embrace it. They're trying to basically capture whatever profit that they can. They know it's going to be a short-lived experiment. May or may not be worth it. But enterprises engage in these kind of rabbit holes every so often. They got to try it. They have to be in there just in case. It's an acceptable write-off, like Fidelity or Backed. That is the real truth behind Bitcoin. That is the truth that all these pundits will not tell you because they are so mired. They are so attached. I have no attachment to Bitcoin. If it goes up and it proves me wrong, then I'll jump in. But until it does, I'm relying on my experience as an enterprise architect, a international consultant to technology and process. a trusted advisor of literally hundreds of CEOs and CIOs and etc. across the world. I haven't done it for the past few years, but that's what I did. I made it my job. That was my job, to go out there and provide them with the advice. And I'm telling you, this is the advice I'd give them. I'd say steer clear of it. Just steer clear of it. It's not going to give you the return that you hope. And if it does at some point prove itself, there's always plenty of time to get in. You don't have to be the first. None of the biggest players in any market, or very, very few of them, were the first. So Robert Leonardo says, these Bart Simpson patterns have been bearish. And, well, that's what they are. I suppose you could put one upside down. That would... it's kind of weird. But yeah, they are a pump and dump pattern. The Bart Simpson is a pump and dump pattern. Every time it pumps like this, you know that eventually it's going to dump. Sometimes it has multiple pumps in it, and then it dumps. It depends on the volition or the goal of the whales. Great Days is asking me to check out Litecoin. Why? Did you not hear anything that I've said? I really don't care about Litecoin or any of them. Ethereum, Cardano, EOS, Monero, Ripple, XRP. I don't care. It's the same friggin' story with all of them. Let's see. The key is figuring out when the Bart Simpson breakout occurs. No, that's not. There is no way to tell that ever. There are, I guess there are higher probability areas where it will happen, because the whales are only going to pump at times when liquidity is weak enough. But again, it depends on what their goal is, and you don't know exactly when they're going to do it, and it happens within. And they may not do it. Sometimes it's going sideways, and volume is going down, liquidity is dropping, and then it does another drop. It doesn't pump up. So what do you do then? It's a lot easier to wait for it to pump and then short it. That is a sure thing. Absolute. It is an absolute profit. But to sit there and wait for it to pump, that's crazy. You don't know unless you have superior knowledge. And I know you don't have superior knowledge. Aunt Aoife says, judging by Bart's hair, 4 more candles and we drop. Yeah, I don't know if that's a valid way to analyze the market either. Might be. I mean, there could be really sick individuals out there that's what they're doing, that they're waiting for it to crest over the last spike of Bart's hair. It could be. It wouldn't, why not? Chris says, definitely, the pattern that was showing before the pump was technically bearish, from what I've heard. But it broke up because whales can move it how they want to. Yeah, it was technically bearish. It was set to drop again. It was a consolidation pattern, ready to just drop again on lower volume, on diminishing volume. continuing the trend. It's a continuation pattern, absolutely. But it didn't. It pumped up. Then, of course, you have guys like the Moon who are saying, "See, I told you so. It was going to pump." And then he says, "Oh, it's going to pump again, and it's turning into a bull flag, and it's going to pump up to 4,000." Even if it does, it's still a short. That's why when it does the initial pump, you put a little bit into the short, a micro position. You wait. You maybe add a tiny little bit more if it takes some time, right? Because you don't know if it's going to pump again, but you know that it may drop. If it pumps again, then you wait for it a bit and add to that position, reduce your cost basis. Same story. And eventually it will drop and you'll make tons of money. Michael Jones asks, Ernie, what's your bottom? Best case scenario by market profile. Market profile doesn't tell you where the bottom is. Market profile tells you what the likely behavior of price is as it traverses through the market structure. And just because there is a big value node way down below, while that may indicate a natural place for price to gravitate towards, it doesn't necessarily tell you that there's a bottom there. The bottom could be zero. Ernie, so you don't believe Bitcoin is hard money? What the fuck is hard money? Do you know what a hard money lender is? If you're talking about hard, I mean, I don't know if you're using it in that context. I mean, there is such a thing as hard money lending. But no, Bitcoin is not hard money. Great Days wants to short Litecoin. Michael Jones says, I think whales look at how many short orders are on the books, then push price up. No, they don't, because there are so few short orders. Short orders and long orders have all left the market. They're both down. If there were a more vibrant, more liquid market, yes, they would look for short orders. But that's not happening here. Would I say that volume profile is useful for BTC? Yeah, absolutely. And that is because volume profile is laying out what and where the whales have taken positions, and that's important to them. You know, they have actual positions that are indicated by the volume profile. They have orders in there. They've taken or established a stake. And that's important to them. Of course it is. And that's one of the reasons why volume profile really is the only sane way to analyze this market. Quite frankly, in my view, it's the only sane way to analyze any market. You don't need indicators. You don't need overbought, oversold bullshit. There is no statistical certainty in a strategy around overbought and oversold. None. It gets a little better as you go to longer and longer and longer and longer time frames. But by then, you don't need the indicator anyways. Indicators are bullshit. Volume profile isn't an indicator. It is a first-order piece of data. It is showing you both price and volume. I mean, I think it's even more first-order than a price chart because it is only showing you price. Well, albeit it is showing you with regards to time. So that's the only reason why it's of any use, so that you can get the time component in there and see other patterns and then use that in conjunction with the volume profile, which is showing you both price and volume. Those are the three primary pieces of data that come in your time series data feed, and that is price and volume segmented by time. So volume profile includes both price and volume. Regular candlestick charts only include price relative to time. And you can put a volume indicator down there and it will show volume in terms of time. But they're separate indicators. They're not combined. They don't provide any additional information. There are some patterns that you can see in when you compare both of those charts, but they don't give you the market structure. They give you temporary behavior, likely behavior. Volume profile, you can trade the market almost exclusively with volume profile. Never even use anything else. Of course, you know, I would hope that people have other technical edges or market edges that they're using to give them a reason to get in or get out, or to give them a reason to believe the market is predominantly moving up or down or sideways. Delta Digger says the bottom is when new money begins flowing back into the overall market. Now, the new money is not going to be coming in when the bottom is in. New money comes in after the old money starts pushing it up. It's the only time the new money will come in. And they come in usually way late in the game. So Shaxter saying hard money like gold. Oh, I see. Gold is hard money. So in other words, something that's physical or tangible is hard in your viewpoint. It can't be created out of thin air like dollars. Trojan Hell says Bitcoin is having a slow and painful death. I think it's going to, it's more like it's receding into obscurity. I don't know that it will die anytime soon, if ever. There will always be, there's always going to be those greater fools that will hold on to it, that are attached to it, that are willing to suffer more and more and more. Somehow they find some really sad pleasure in suffrage. Or suffering. Suffrage is the wrong word. They are masochists. Ernie, do you have a bot that trades using your signals? We have an artificial intelligence, the AI setups. The AI setups is, in fact, a neural network that we've programmed over the past 5 years that is a fantastic system. Fantastic. I don't know why everybody listening here isn't at least trying it. I mean, my God. Try a month. And you'll see. We generally get about 20 to 25 signals that will trigger in the month. So far, we've had better than a 90% win rate. We target an 80% win rate, of which 70% meet or exceed the target that the AI lays out for us. It's a fantastic system. The only thing that a trader needs to do is, because the multiple non-correlated strategy is taken care of for you through the AI, and that is they need to properly position size and understand their platform and don't over leverage. A lot of people get very greedy, and they, oh man, it's winning so much, I'm just going to pile it all in, which is really a bad idea. Ernie, why are the whales dragging the demise of this crypto mess out? Another exchange just stole about 150 million from clients. That's probably why they'll just keep on pumping it and trying. It's like throwing sugar water, out into the bowl every once in a while. The sugar water dries up. Up, gotta throw some more sugar water out there, and then all the flies come in there, and then they scoop them up. It's kind of a gross thing, but yeah, they eat flies. Can your AI systems make you a millionaire? Anything can make you a millionaire. It's giving you great trades. Oh, finally, MDis says something worth repeating. For someone who watches this man frequently, you might start to question his stake in the space. Yeah, that's a good question. He daily bashes anyone whose opinion differs from his. Of course I do, because I'm fucking right. And when I'm fucking right, I don't give a fuck what other people think. All right? So there you go. So yeah, I'll bash you. I'll listen. And if it makes sense, I may give you that credit and I may agree and adopt it. But if I think that you're wrong, I'll tell you. I think you're fucking wrong. And I tell MDis that he's wrong all the time, because he is. He's wrong all the fucking time. But it's good for you to point that out. He missed many boats and claims this is... What did I miss? I didn't miss anything. See, now you're just talking out your ass. James Push, can your... Oh, yes, we already asked that, James. Thank you. So Trojan Hell says, MDis, you might want to watch and learn from Ernie. I've been watching him for a year now, and he's correct from beginning to end. Thank you. Not correct on every little thing. Every once in a while, a little off. But, everyone's allowed a little bit of leeway. There's always... But generally, yeah, I've been correct. Mustafa Freywen. I want to learn VSA analysis. That's volume spread analysis. I would say that volume spread analysis is kind of a useful tool, but it is far too complex and ambiguous. And I would say that volume profile analysis is like order of magnitude, maybe 2 or 3 orders of magnitude more effective and easier to use. And if you want to know how, go to my site, Trader of Futures, click on the Volume Profile course, sign up for the course. I'm going to hold a class this weekend. Nathan E. Just got in. If all the volume profile talk has finished, we'll have to rewatch this. No, the volume profile talk hasn't even really begun yet. The Trump tax return will rally Bitcoin. Nah, I don't see any correlation whatsoever. Wrong on pot stocks. How was I wrong on pot stocks? I was 100% right on pot stocks. I called the absolute top to the day and called the bottom. All right? How was I wrong on pot stocks? You just make shit up, man. Just because it ran up because of the Farm Bill, fine. I'm still going to be vindicated on all of this. It's going to go down again. I missed the 2-year run on pot stocks. How do you know I missed it? I didn't start talking about it until this past year. This guy will bash you 50% of the time for agreeing with him. What do you think of Salvini threatening the Italian central bankers? I'm not familiar with that. I'm sorry. I'll look it up. Frank says the option course will be good. Yeah, there will be an options course eventually. I have several option courses that I'm going to resurrect from my old YouTube channel. All right. Well, I've said everything that I want to say, at least from a commentary point of view. Now, let's take a look at the markets. Let's take a look at volatility has been dropping. And that's when volatility drops, it's best to sort of back off from the market. And the reason for that is that volatility drops, your average true range drops, your potential for profit drops. Now, you may find that some things will start trending, and that's okay. If you can pick that up and hop on board, that's good. But as a general rule, day trading and swing trading go out the window. They become very difficult during volatility drops. We need the volatility up there so that we can create potential. And volatility right now is dropping. A lot of that has to do with, I think that there's some culmination coming to the China-U.S. trade deal, at least some anticipation for that, and we'll see what happens. So, so volatility is definitely dropping, and that's what I'm showing here in this chart. I think that it really right now we're establishing a value node right here, and there is some level of value. Let's hope that we can hang out here for a while with the possibility of jumping up a bit. Between this range, now the previous range of 10 to 14 or 15, we've been in there for a long time, and a lot of people thought that was going to be the new normal. And it was for a long time, and that was due mostly to Fed malfeasance and really no opportunity, the complete de minimis of dollar velocity. So let's hope that we do stay up in this range between 16 and 20, because that is the sweet spot for trading. But right now, on this falling edge, it is very difficult. So, but I do expect it to probably come down to, probably 14.5 on the VX, maybe even 14. But as long as we stay above, anything above 15 to 20, I think that we'll be good. We'll be good in terms of opportunity. All right, let's take a look at the S&P 500, the biggest market. Or not the biggest, but one of the biggest markets, the biggest equity market. So, strong run off the bottom. I've already said that, a long time ago, I called it back here in early January or mid-January that I felt that we had confirmed that the bottom was in. And now that we were reaching up potentially to take out the level of 28.15 or so up here, right off this volume profile, you can see it right there. The edge of the volume profile. So I would say here, and here. It's kind of like a stepping ladder. Of course, here. If we get above here, we're going to run. And we'll probably run to here. And maybe an intermediary step. To there. So there's your steps. There's your stepping stone. It's very possible that if something goes wrong with the trade deal, that we could drop back down to here. We can't use that. We need a solid line. But I think what's going to happen is that we're going to create a balance. It's going to probably look something like this. And then from there, we are going to continue up. To here. I'm sure there may be some intermediary moves. Maybe something like this. We've got to fill out this entire area here. We need to create a more mature area of value, this whole balance here. Let me do this. That whole area needs to be filled in. And then from that, we'll launch higher. But not until we've created and established a base here. I think that's what needs to happen. A slight stepping stone above the area that was created below. Maybe something like this. Maybe we'll get an intermediary top, a node, maybe that looks like this. I should give this a different color, interim color, like a blue, to be more in line with the volume profile. Yeah, that looks good. If you go back to, my previous videos when I was mapping all this out, you'll see all the work that was done back here. When I called the chart pattern down here that confirmed the bottom was in. So there is my my best case scenario. I think that even if we do drop down, if let's say the China deal goes south, we have some problems overseas. I think that it's possible we come down to this balance that has a peak at 2667, but then we continue up. That's sort of my my second scenario. My first scenario is to create a continuation pattern here from which we will launch up to this next level and then start another continuation pattern up here. So, in other words, I think what you're going to see is something like this. All right. There you go. I guess that's saved automatically. All right. I think that's the most likely pattern that we'll see, and the new formations that we'll see. Each of these blue lines, these horizontal lines, are mapping out structure, and we'll make trades along each one of those where they demarcate. Display ZZZ wants to know if we're going to have WW3 in the next 100 years. I'm sure there's going to be some major war. It's hard to go 100 years without a war. I don't know if it will be a WW3, but that would be disastrous. Can I comment on CL? Says Vongera. Well, okay, before I go to CL, oil, crude oil that is, and if you've been following my analysis, this is where I like to chime in and say that I don't fucking care what you think when I know that I'm right. Well, I was right. I knew I was right. And if you've been following it, like I said, I've been mapping this out for the past, since the beginning of the year. All right, so now I'm going to go to CL, and then you tell me what you think. All right. Ready? Here you go. So all these lines and everything that I've drawn have been since the end of last year, or so, more like early November or whatever. All right? So we have the move down, we have the move up, the consolidation, the move up again, and now this move down, and we can see exactly where I'm looking for a bounce. And after this happens, I think that we may hang out on this volume node for a while and then move down significantly. Start filling in this balance here a bit. So in other words, I think that I think there's a good possibility that we're in this range for a bit. And then something like this. Okay? That's where I think we're going. And I think that we're going to, for the rest of the year, stay within this yellow area. Up and down, between 45 and 55, or 44 and 54. But as you can see, those are my lines that I drew well in advance. If you've been following, you would have known this. I am looking at a... now, this, I think, coming down here, I'm not sure that this is actually going to happen. It may be a very temporary thing. But after it, well, that's pretty much what I think. Anyways, I think this is going to be the continuation, and then we probably do something like this. Hold on. Up to this level, and then down to the bottom of this. Probably right around there. So this will be the completion of this big bear flag that I drew in here. And that's exactly what that is. That's a big-ass bear flag. So maybe I can shorten it up a little bit like that. That looks about right. And as you can see, we have diminishing volume, which is strengthening this case. Average volume dropping. I expect it to continue to drop until we break out or break down. Ernie, would you agree that Bitcoin was a digital tulip bubble? Well, I mean, no. I mean, tulips actually went way higher than I thought they could ever. Well, I wasn't around back then, but tulips, I think, went much higher than Bitcoin did. But it was a bubble. That's all it was. It was just another bubble. I don't know who that is, so they go away. He'll never recommend accumulating anything for the average Joe. Instead, he says buy his AI program and not buy silver or gold, BTC or XRP. No, I'll never say buy BTC or XRP while they're cheap as fuck. That's not true at all. Again, you're talking out of your ass, Amdes. As a matter of fact, one of my principal tenets, and I'll show you what I wrote this morning, and I write it all the time in my AI room, the AI room. Let's see, where was it? It was up here somewhere. There it is. So here it is. Here is the holy grail of trading. And I'm going to read this to you. And what the ultimate purpose for trading is. Number 1, trade very small, very, very small. Number 2, favor preservation of your capital over making profits or searching out ways to make a profit. That may seem counterintuitive, but that should be your number 1 goal, is to preserve what you've already made. Number 3, trade only strategies that have a proven edge. Number 4, trade multiple non-correlated strategies. So, get what I'm saying there. When you trade, you should be trading multiple strategies, and they should be uncorrelated to each other. Number 4A, develop multiple streams of income in your trading. Or in general, develop multiple streams of income. Number 5, trade within a cycle or a cyclical continuous improvement process like an OODA loop. This is sort of the structure of your trading. Number 6, now this is where I address what you're talking about. Take profits and move into wealth building. Do not make your goal to increase the size of your trading capital. Make it to increase your wealth, your long-term holdings, the things that develop your cash flow and your overall wealth. That is the ultimate goal. Number 7, and finally, your wealth building should also be fed by multiple streams of income, of which trading is only one. Never trade unless you have income from other sources to pay your bills. So there you go again, MDIS, talking out your ass. This is what I advocate. It's what I've always advocated. That your ultimate goal is to accumulate wealth and improve your overall cash flow. And a portion of that cash flow should always be diverted into your wealth. I've talked about this millions of times, about what type of things to accumulate. Primarily, I'm in favor of income-producing property or businesses. Businesses, plural. And then further down the road, things like other tangible assets, income, or collectibles, investment-grade collectibles, precious metals, treasuries that produce dividends, etc. That is what I've always said. All right? So, again, wrong. Every step of the way, you're just fucking wrong. Every fucking step, you're wrong. And I am right. Can't help it. It's hard being right all the time. Just kidding. Alex says, consumer confidence, PMIs, earning expectations all coming down. Unlikely we make a new SPX all-time high this year. Those are temporary blips. And no, the manufacturing index isn't coming down. It's been going up. The other day you mentioned you recommended Tasty Trade, but don't like their big numbers trading style. Could you elaborate? Yeah, they have this, they think the strategy is to just trade a lot. And that if you trade a lot and then follow their methodology and through the law of large numbers, you will make money. And I don't agree with that at all. I think that the ultimate strategies that you follow should have actual edges, that they should have meaning in the market. You don't just trade because it's a statistical probability. That's what I have a problem with. Did the AI have a long trade in CL? Well, I don't know. It depends. It's it has windows. We've done tons and tons of trades in CL, and yes, we have had long trades in CL. As a matter of fact, I think the last trade that we had in the AI was a long trade, and it made tons of profit. So that's kind of an open-ended question. The video chart is blurry. It's perfectly unblurry. Trading is never a stream of income. It can be one of your streams of income. What I'm saying is that it shouldn't be your primary stream of income. And if you try to substitute trading for all your other work, you're going to lose. Then I wouldn't enter into trading unless you already had other streams of income that could support you, because trading is so hit or miss. Very difficult to make consistent income off of trading. Unless, you have, some automated traders and high frequency traders and other things that can make small amounts over a long period of time. All right, so I don't have any more time. I am done here. I have an appointment coming up. I'm very sorry. I just realized the time. All right, everybody. Thank you very much. And take care of yourself. We'll see you tomorrow.